Hi, this is Dave, and welcome to the weekly market recap, closing out the week for, I guess it would be Friday, February the 28th. I'm recording this on Sunday, March the 2nd. So let's just jump right into this. Let's take a look at the Dow Futures on the daily chart, and let's just zoom in rather, to the daily chart of the Dow. And in last week's video, I think we were talking about, if memory serves me, we were looking at two potential scenarios for decision points. One was looking to see if we could get a pullback into this zone here, and looking to see if we could push off from there. That did not happen. The other decision point we were looking at was a break of these highs as a potential go with. Now we did break above these highs on, we closed above these highs on Thursday. Let's see here. Okay, this would have been Friday, Thursday, Wednesday, Tuesday, Monday. So we probed above them on Monday here. We probed above these highs on Monday, and then we actually closed above them. We managed to close above them on Thursday, and then we held above them on Friday. So I think now that we've closed above this sort of decision point here, a potential retest of these highs around 16,500 to 16,600 seems to be the next logical move. I think that's where we would find, that's where we would logically find resistance. So we are in an overbought situation here on the slow stochastic. We've crossed above the MACD zero line here. So we're looking, we may get a little bit more upside from here, right? And the other issue is that we're heading into a period of seasonal strength here in the stock indices. So let's see here. Let me just close this. Let me jump over to, I apologize, it's Sunday and I just went out for brunch. I'm a little bit exhausted. So I apologize for that. Let me jump over to the, okay. Let's take a look at some seasonals here. So if we look at, this is really just a review of some of the stuff we've discussed in previous videos. If you look at where we are this week, right here, you can see that we're heading into a period of potential seasonal strength. Into, let's see, that would be the end of this month, the end of February, beginning of March. And it looks like, on an average basis, we peak somewhere in the middle to the end of April, pull back, and then we have the potential to go higher. So we are heading into a historical period of seasonal strength in the Dow. And I won't cover the other indices from a seasonality standpoint, but we are essentially in the same situation there with the other stock indices. So let's just stick to the more traditional charts here and look at the S&P futures. So the S&P futures, we don't need these fibs anymore. Okay, let me just delete that off and clean this up a bit. You can see we broke the 5 ATR 20 from the downside, and we sort of flipped the script on that. So now that's becoming support, and we broke out. We essentially, except for the Dow is lagging. We broke out to new all-time highs in all the major stock indices except for, I guess, the Dow. So, S&P futures, new all-time highs. Let's take a look at the NASDAQ. I think the NASDAQ's leading the market. It's a little bit, sideways, but we are, slowly chugging higher, broke out to new all-time highs on the NASDAQ. All of these indices are in an overbought situation. Let's look at the Russell futures, same situation, new all-time highs, okay? We closed that new all-time highs in all these indices, essentially. Let's take a look at the transports from a Dow theory perspective. The transports are a little bit, I guess they're following well, not really. They're a little bit laggy. The Dow closed at, not at its highs, but it closed at highs. You can see there it closed above Thursday, closed above Wednesday, closed above Tuesday, closed above Monday. But if you look at the actual transports, okay, that was the Dow. If you look at the transports, they're still below this high. So they're essentially lagging they're essentially lagging. Okay, so we'll need to keep an eye on there. There's a bit of a divergence going on there. Let's just jump over to some other markets. Let's take a look at the dollar index. The dollar index sold off pretty hard, and excuse me, the next major support area on here is 79.28. But you can see the dollar index sold off pretty hard. But we are still, just about in the bottom of this range, and you can see momentum is starting to bottom out a little bit there. So we'll need to see if we hold 79.28. That's the next major level that we're coming into. And we're still essentially sideways, but closer to the bottom, coming into the bottom of that sideways, long-term sideways range. Let's take a look at the euro. The euro found resistance at 138. There's been a pretty strong ceiling at $1.38 to $1.3820 in the euro. We just came into the top of that range, and we came off, and we're in an overbought situation. So the question is, until and if we can get a decisive close above $1.3820 in the euro, we're still in that long-term range. A decisive close above $1.3820, I think, would be a pretty major game changer. Let's take a look at the USD CAD. USD CAD is holding above right around $1.10, and we have the potential here. We have the potential to put in some sort of a double top in this area. This didn't quite test the high here, but it came close enough into the range of the highs. We have the potential for a double top here in the USD versus the CAD, but I'm still bullish on it as long and until it holds this this major trend line here and this 5 ATR 20. So we've got 2.5 cents to the downside that we could go, and that would still keep me on the pretty much on the bullish side until and if we break those key technical metrics there. So let's jump over to the natural gas. Natural gas came off pretty hard, and I'm looking to see if natural gas can hold this area here. It's a zone between about, let me just parallel this line, between about $4.44 to $4.58. We closed just above $4.58 here. So I'm still bullish as long as we can hold this zone here. If we push off, if we break that, and essentially break this intermediate trend line, that would not bode so well for higher prices in the natural gas. You can see here we came off really hard. $5.74 or thereabouts seems to be a pretty decisive ceiling in the natural gas. Other than that, I don't really have a lot on it. Let's take a look at crude oil. So crude oil is holding this key dollar. I was just talking about currency, so I keep calling it a dollar. $101.32 a barrel. This is a pretty key level here. It's playing out to be pretty key. We came down, we tested it earlier in the week around Monday or Tuesday. We held it, but we're essentially going sideways. I don't know if you could consider this sort of a small flag. We've had an up move. You got a bit of a flag here, a sideways consolidation. The question is, are we going to hold 101.32 and push off to the high side, or are we going to come back down and fail that level? We are basically overbought there. Trending indicator is positive. MACD starting to roll over a little bit. So as long as we hold 101.32, I'm still cautiously optimistic on the crude oil. If we break back below 101.32, that would put me, sort of on the other side of the fence. Let's see. Let's jump over to the gold, and I'm going to delete some of these fibs. I don't think they're as relevant anymore. And some of these targets that we had going back in the past, you can see that we're just, I'm going to delete them off, but we're just holding the top of that target zone. The high end of that target zone we had going back a number of weeks ago. So as far as I'm concerned, talked about the gold in a previous video, and we were talking about how we have these up moves, and then we just sort of chop around a little bit with low energy moves, and then we sort of have another up thrust. So the question really is, as long as we can hold the 21 exponential moving average, I guess I'm more bullish than I am bearish. That's sort of a line in the sand. here, it looks like the trending indicator may roll over to the high side, but we are overbought, right? So as long as we hold the 21 EMA and we can continue to hold that, we have the potential to come into, 1361 to 1403. If we break the 21 EMA around 1307, that would put me more on the bearish side of gold. And let me just, we do have a developing trend line here as well, somewhere around this area here. So, as long as we hold this sort of zone, then we don't really have a lot on it, but we're looking more bullish than we are bearish, but there's not really a lot going on there. We're struggling to get above 1340. Let's take a look at silver. Let me delete some of these fibs. Silver, same story. I mean, we really need to hold this 21 exponential moving average, see if we can get anything going back up to the high side, or if we're going to fail that and come back down and retest the lows. We are a little bit overbought here, so I'd like to see where these stochastics are going to reset themselves from a momentum perspective. Let's take a look at the 30-year. So the bonds seem to be catching a bit of a bid. You can see this sort of you know what, let me clear this chart off a little bit. We don't need all this. We don't need all this stuff from the past. Let me just delete this off. And this. And sorry, I apologize here. I should do this sort of offline. But what you can see happening here is you've got this sort of cup pattern, right? There's the left side, the right side. Here's your sort of handle. So the question is, are we going to break above here and peg some of those higher levels out there? If we do break above this cup on a decisive basis, then essentially what I'd be looking for in terms of targets or potential areas that we could test would be a 1272, a 1618, and potentially if we get something going at 2618, extension above those levels. So if you look at where some of these levels might overlap, you've got the potential to come into 135, 136, somewhere in and around that area if we do get a breakout of this sort of shortened, well, it's not that short, it goes all the way back to November of 2013, but you've got a breakout of that cup pattern would take you to some of these higher targets between 135 and 138. I know that's kind of a wide range. Let's take a look at the ZTY, which is the 10-year. And you know what? Let me get rid of some of this stuff. Apologize. I'm going to keep those fibs on. I think they're still relevant. And you've got the same situation happening there. And you've got that cup, that sort of handle. If we can break above this, then we can come up and test some of these levels. Let's see where those levels might come in, if there's going to be any overlap with some other key levels here on the chart. 1272, 1618, and 2618 extensions would bring you into some of these higher levels around 128, potentially 128-ish if we do get a breakout. So 126 and then 128. Looks like the zone right in around this kind of zone here. Okay, so that's what we'd be looking for. Let's take a look at the if we get a breakout of that cup pattern. If not, then we could come down and retest the lows. I don't really have a lot on this, to be honest with you, but to me that you've got a valid technical pattern there, and we just need to see if we're going to break out and confirm that. This is the 10-year yield. And you can see 3%, or where the 30 mark is, that's around 3%, in the 10-year yield is seems to be a pretty strong ceiling, and we're really just not doing a lot here. Okay, so I don't really have a lot on that. Is there any markets that we haven't covered that maybe we should cover? You know what, I think I'm gonna wrap it up there. Even if I did miss some markets, we can pick it up again next week. I'm gonna wrap this up. We do have an upcoming CSTA Oakville meeting. I haven't put out the announcement yet, but the CSTA Oakville chapter is going to be meeting on March the 12th. So stay tuned for that notice. That'll be going out this week. at some point in time. It should be an interesting meeting. Look forward to seeing everyone there. And if not, I'll look forward to seeing you at the next update. So good trading, good investing, all the best, and we'll look forward to seeing you soon. Take care.